Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. Let's look back at what happened in the financial markets in the past week. And I'll look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market resumed its January rebound this last week as world stock markets actually put on their best start to a year ever. World markets gained 7.8% in January, and the U.S. market gaining 7.2% is the best since 1987. And that's, of course, after the worst decline in December since 1931, so a rebound certainly was reasonable. Earnings continued to be overall positive, with Boeing and Apple and Merck helping the Dow move up strongly this week, though Dow DuPont was a drag on the Dow, missing and moving lower. Mostly what stirred the bulls were favorable comments out of the president this week on the U.S.-China trade situation, seemingly optimistic, but then putting a damper on it by saying that, well, some of the big issues don't seem to be getting resolved, and he brings up the tariffs again in order to potentially strong-arm China, if he thinks that could work. But the big lift came after Fed policy statement came on Wednesday and the press conference. Powell went from seemingly a pragmatic Fed chairman to a clueless dove, flying around erratically with no place to land. He says they're data dependent now, which is, I say, bullcrap to that. They're stock market dependent, and they made it pretty clear as they started to soft talk as the market was moving down in December. And if it's economies they're looking at, well, they could look right at the world economies, with China slowing and us seeing the data really weakening out of China. The Eurozone only 0.2% growth going on, and that's with them still in an extreme easy situation. Italy actually in recession, with them having a lot of problems, big problems in France too, and Japan in and out of growth over these last few quarters, so big problems out of them. So the world economies really are struggling. Maybe that's what they're looking at. If the Fed looks at the U.S., our growth has been downgraded to about 2.3% for this coming year. And that's still, with the economy doing better because of the president's tax cuts. Earnings having really been better last year, a huge effect from those tax cuts, especially for corporations, but that really waning now as we look forward, and will have less of a positive effect on earnings reports. And if the Fed is stopping here, like it sounds like they are, and I already talked about the fact that I'd be surprised if they had one more increase this year. They believe that they need to stop at 2.75% and at a $4 trillion balance sheet. That is a sad situation because they believe that's too tight. That is incredible. And the Fed put us there. It's sad that the activist Fed since 2000 blamed Greenspan for starting that, or the nature of the creation of the Fed back to 1913. All of that has devastated the buying power of the dollar over 106 years and continues to be a problem. They're created in order to help the situation of smoothing out economic swings. Well, they plainly create the economic swings. And we've got lots of problems going forward, and the politics ahead are going to be absolutely sickening as we move through 2019 and into the election year of 2020. Even with the extent of this rally, it fits really well into our overall picture, because our analysis has shown for months and months that a weakness into the last quarter of last year, and then a rally into this beginning of this year, into February, potentially early March. All of that is, in our opinion, all in the context of a major bull market top that is going on. And overall, this rally, which looks nice, has gotten into some pretty good resistance areas, and we think it's only just a matter of weeks before a top is in and failure is at hand. So we're looking for some pretty tough situations moving forward for the stock market. We've shown a lot of videos recently about a lot of stocks moving up into key resistance areas. We'll see how they act here in the next few weeks as they get into those areas and whether or not they start falling off. It could be some choppy situation here first, but the risks are growing. Let's take a look at our 60-minute chart of the ES, that's the S&P 500, as we take a look what happened during this week. Gray area being the area of the overnight trading, and the white area being the actual day trading or pit trading, as a pit trader like I would say. We had actually looked for an early dip during the week and then a rally for the rest of the week, and we got that. We said that there would potentially be a high around 27.20. And you see that it got up to on the cash about 27.16. Really interesting. I'll show you in depth on that and all the other futures that we look at the end of the show. Monday, China weakness came in, and CAT and Nvidia dropped pretty sharply. That's what weighed on the market. Couldn't really stay down that much, and then came back in here, as you could see on Monday. Here, the Department of Justice filed criminal charges against Huawei that brought a small dip, but not very much overnight. We had a mixed earnings report as M then lifted the Dow, but the NASDAQ was weaker. Consumer confidence fell sharply right in there, and after a little higher opening, the NASDAQ really weighed on the market, and that slipped down. They were waiting for Apple earnings, and that came out as a beat. That helped the market Tuesday night, Wednesday before the opening. And then some news came out overnight about the hard Brexit is more likely. That brought a little dip in Europe, and it sold off our futures right there. ADP private job creation was about 213,000 right at that point, which was not bad. Boeing and Apple came out, and that lifted the Dow almost 350 points over this big move in here. And then came the FOMC statement right over here. No change. They're going to be patient. They see the spending is strong. The jobs and economy is still strong. Well, if they see it is still strong, why are they data dependent? Why did they stall? They don't want to shake up these markets. The only thing they have is us feeling rich because asset prices go up. And they said, well, keeping a larger balance sheet would be okay. I question that for sure, as they're afraid because reducing the balance sheet is a huge drain. Just as increasing the balance sheet or buying up all of those assets was stimulating, when you reduce it, it's a drain. And they obviously are very stock market dependent, because if they can't do it without the market having a fit, they're just plain out not going to do it. We had some Italy recession news came out in here. And the Eurozone fourth quarter growth was about 0.2%. And Canadian growth actually was -0.1%. So we get some really negative economic news that are coming out. The world has got problems when it comes to growth. And this was with all that massive stimulus out there. Man, there is sickness when you look at these economies. Trump, here's where he came out upbeat about the China situation. And still talking hardline on tariffs, though, and the market pops again. So you had this big pop on the FOMC. You had a follow-through on that right over here. Here, overnight on Thursday, Amazon earnings came out weak. Their earnings were okay. Their guidance really was softer than the market wanted to see, and that fell off. China data came in weak over here, and the market slipped off. Payrolls came out up 304,000. Very strong. That is the 100th month in a row of payroll growth, where you can't balk at that, can you? Without any negative growth in there. Well, that's an effect of the stimulus, but at what cost? That's really the question. U3 edges up to 4%, the unemployment rate, as more people do come into the workforce. The market tries to rally, gets up near the top of those resistances that we were looking at, and then begins to fall off. And the NASDAQ actually getting the worst of it for the day. So that's a look at what happened during the week when you break it down to hour by hour, and the news that actually affected the moves during the week. For the week, the major indexes gaining about 1.5%. The Dow may be a little bit better than that. Bond market up more than a point. The dollar is easing off here as the Fed has, basically stopped, and that makes the dollar interest rates go down, and it makes the dollar less appealing, and the dollar is risky, and we're going to show you that on our short-term view going forward. As the dollar weakens, gold gets better, and of course if the Fed is done, gold could skyrocket in here. The very strong patterns that we're looking at there, you could see that on the dollar and the potential breakdown and gold and on everything for our deeper analysis on Future Speak, the show that we do every single Wednesday. So we're just going to give you a peek at the end of the show of our short-term view, looking over the next week. But for the bigger pictures, you really need to watch Future Speak, which is level 2 members or higher for our entire video library. Oil gains about $1.40 on the week as OPEC tries to cut production. Saudi Arabia doing that, but gains are not very big, and oil's running into some resistance areas, and the products are weaker. Gasoline looks absolutely horrible, and we talk about that also on our Future Speak show. Talking about our membership, you can become a member and try everything. We have so much going on and so much being added every single month here as we move forward. Lots of enhancements coming to our offerings. We have our stock index report, which is amazingly filled with comprehensive information, and that's soon to be added, another report to be added to that particular membership, and you'll be able to see some of our favorite stock analysis. Also, you can become a level 2 member, and we have a trial on that for half price, just $18.50 for a month. That's all of our videos, and almost 400 videos in 8 different categories, plus the stock index reports. So you'll be able to see all of that for half price, just $18.50. If you want to get our rankings and trade setups, it's 84 of the best traded symbols with our option bias indicator. That's level 3, and you can have that special for just $43.50. That's half price for 1 month, and you'll be able to get that and our whole video library also. And then, of course, if you want my charts on your Thinkorswim platform, our preferred broker, then you will be able to do that with our level 4 membership, and you can get a trial on that for just $73.50 for a whole month, plus stock index report, all of our videos, and of course the stock index report. So our rankings and setups, if I didn't say that, also for level 4. So just an amazing amount of information. You go to our membership page and get the details I just gave you, and then if you want to get one of those half price trials, level 2, level 3, or level 4, I'll be glad to send that to you. Just write to support@askSlim.com, and our support team will send you those special links which allow you to get those half price memberships. Just all you have to do is indicate to them which one you want, and they will send you those. So that is our just incredible offerings that we have going on right now, so that you can get into our askSlim family here and really learn what we share all the time. And our cycle analysis is just the most unique type of analysis you'll ever see. And of course, we have a workshop for that. Check our workshops also. That's the opening segment in here, and I'm going to be right back, and I'm going to bring you, as I always do, the best and worst stocks for the week.
Here come the best stocks for the week. These are stocks that had big rallies, usually driven by good news. Watch as Slim shows his cycle analysis and discusses if there are more gains to come, or if the odds are high these upside moves are selling opportunities.
All right, for the best stocks for the week, got plenty to show you in here as we've had earnings going on and we've had a lot of stocks moving up. The question is, will they keep moving up? Are they in a condition to really give you continued moves, or are they moving into resistance areas in negative patterns? That's really very important to trading and investing, that you have a very good handle on that, which is the best and which is the worst, whether they go up or down. I'm going to give you an example right now of a stock that is really got itself in trouble and now trying to repair itself. And I'll give you an example of what that looks like when a stock has gotten hit but then starts to improve. In this case, the best stock for the week is AMD. That's Advanced Micro Devices. As you can see in here, our cycle analysis. Well, what we want to look at really in here are these, if you're new to this and have never seen this before, and many of you are, on the bottom are what we call cycle brackets. These are just the ideal rhythms in the market. Cycles are the heartbeat of the market. They're a visual picture of money flow in the market. And we put in support and resistance zones. We have on here also 3 moving averages, the 34-week, the 13-week, and the Hull moving average, which we use for momentum on our weekly charts. And you can see in here that what we're looking at is an improving situation. AMD earnings beat, analysts upgrading the stock, and for the best stock of the week, up around 20% on the week, a really phenomenal gain. Now, why tell you the stock is repairing itself is that it's moved into this resistance, this sell zone right over here, but it only has about 4 weeks left of this corrective time period over here. You can see the corrections in here. This one in 4 weeks collapsed, as you can see right there, and all of these at the end of the cyclical period have declines. This one's so strong it barely declined, but it still fell from 1730 down to about 1430. Well, that was about a 15-18% drop. So we're looking for a pullback in here from this resistance area after these good earnings, but there's not that much time left to go, and the odds are once we get past this corrective period, it will be moving up again. So we'll be probably establishing a buy area somewhere in here, but not yet. We want to see what these next few weeks look like. AMD an improving situation when we look at that, as they have solid gains on solid earnings. Analysts really liking it also, and we're kind of with it as we think that it is improving. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you'll get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.
Going to sit